Good morning, everybody. I'm Brian Iverson with MyCityLender Home Loans, here as always with Shane Sauer, and this is your weekly housing fast break. We'll get to the mortgage rates and economic news in just a moment, but first, here's Shane with our housing update. Good morning, Shane.
Good morning, Brian. Hey, a few things to go over this morning, folks. One, the Maricopa County median list price moved downward again this week, which marks the lucky 13th straight week of decline. Inventory did increase overall for single-family homes last week. This marks the third straight week of gains in Maricopa County. The number of properties seeing price reductions or improvements fell again last week, though we're still showing about a 48% number, which means that nearly half of all the single-family homes in Maricopa County are having at least one reduction before selling or leaving the market. Lastly, we're settling into a balanced or maybe even more of a buyer's market. What does all this data suggest? That it's a great time to be a buyer and get the home of your dreams. Hopefully, rates are cooperative. Brian?
Thanks, Shane. Mortgage rates did have a much calmer week last week compared to the previous two. The average top-tier 30-year fixed rate held a fairly narrow range between 6.49 and 6.58%. The current average 30-year rate for conventional loans stands at 6.56% this morning, with the VA and FHA average rates unchanged at 6.12 and 6.10%. Lower interest rates spurred another strong week for application activity as borrowers with higher rates took to the opportunity to refinance. Mortgage applications increased overall by 16.8% from the week earlier, with refinance index up 35%, which is the best week we've seen since May of 2022. Purchase applications, however, saw only modest gains at 3%, demonstrating that rates need to go a bit lower before we're going to break that locked-in logjam. In economic news, the July inflation report showed cooling to the lowest level we've seen in more than 2 years, and the labor market is cooling, with unemployment ticking up to 4.1%, which is the highest it's been since November of 2021. With all of this, the Fed is widely expected to cut rates by at least a quarter point at the September meeting. That's it for this week, guys. Thanks for watching. If you have any questions, please reach out to Shane or myself. We'll see you right back here next week for your weekly housing fast break.